Good afternoon. Ken Jolliffe with BIS Commodities here in Cedar Rapids. We're going to go through the review for the week of January 14th. Positive week on our grain trade. Corn was up about 18 3/4 cents for the week. Soybeans up about 56 cents on the week. Wheat up about 36.5 cents on the week. Strong grain trade this week following the USDA report from last Friday. You know that nationally cut down on the corn carryout figure down to about 600 million. Bean number was raised by 5 million, but when looking back on that particular number and the strong U.S. crush rates and the continued strong export demand, that 5 million bushel increase has been used up already. Corn stocks will continue tight here as we move forward. One little caution to take a look at: we did see the ethanol grind number this week fall to one of its lowest levels since the renewable fuel standard started about 5 years ago. This will have to be monitored to go forward. It could affect the total usage, for ethanol here yet this year. Export sales did pick up a little bit, this week at about 40,000 metric tons. That business will still be stagnant as we move forward, as we still continue to see our offers well above Brazil offers, as they seem to have a little bit of corn left to put into the export channels here yet. As you're talking about the beans, the crush number was strong, the export numbers were strong. Export number this week of 1.6 million metric tons, with the majority of that going to China again. Now there is a little concern that the last time that we had this large of an export number, we did see the Chinese come in a week or so later with some cancellations. We are getting to that time frame now to where some of these things could be switched over to the origins out of South America. That'll have to be watched here closely over the next probably 4 to 6 weeks. Weather-wise, Brazil itself looks pretty favorable in most of the growing regions. There seems to be some concern in the far southern regions of Brazil going into Argentina. Nothing really major at this particular time, but there's a dry period that they're going through with the extended forecast a little bit dry. Now that'll be watched particularly this coming weekend. As far as our weather here in the United States, the southwest and central plains continue to be dry. We got a cold front moving down this weekend with very little moisture that's going to generate from that. The positive thing about our weather is that here in the past week we did see some heavy rains come up through the lower Mississippi River Valley into the southeast part of the United States. This did help alleviate some of the water problem concerns for shipping on the lower part of the Mississippi. There was some concern that we would be in a time frame about now to where we'd have to shut the river down because of the low water, and that looks like that will not happen as the water levels moved anywhere from 3 to 5 feet higher this week based off these rains. So some positive there. Moving forward, one thing we take a look at now, we do have an upcoming 3-day weekend. We have the Martin Luther King birthday holiday on Monday, and the electronic trade will not open until 7 o'clock Monday night. So giving us some time to probably assess Brazil weather, Argentine weather on this 3-day break like this. Livestock market this week, the hog market was fairly steady. The cattle market, we saw a major collapse in that. The cash markets held around the 125, 126 level. The futures market that has been very well supported by the funds for the last few weeks. We finally did go through a technical level to where we saw those funds kick out a lot of their excess longs, and brought the futures markets back down closer to the cash markets at this particular time. So part of the break was blamed on a story that Cargill was going to close a plant down in Texas. The reason for closing the plant is lack of supplies, which may be short-term bearish, long-term maybe a touch bullish as we move forward. So other than that, really not a lot to talk about this week in our commodities. The funds have been more interested in looking at equities than commodities. We've seen little surges of fund activity this week, but not nearly the contract amounts and the dollar amounts that we've seen in the past year. So we'll look forward to a 3-day weekend and talk to you next week.